And if people are in, please use the chat box there to shoot us some messages. Let us know where you're coming from. Okay, a few people coming in. Give it a couple more minutes, or just one more minute. Tell us where you're coming from. Tell us the weather that you're experiencing. I know it's a rainy day in Boston where I have a bunch of colleagues, so they're feeling it. I'm down in Scottsdale, Arizona. So if anybody's in the Southwest or the South that are enjoying the weather, please let me know. We pay for it in the summer, so I have to brag about it now. So, okay. And once this clock hits 3, we'll get going. 3 minutes after. All right. All right, Mims, let's get going and take it away.
All right. Well, welcome to Tax Tactics, Uncovering Hidden Refund Opportunities with Leighton. My name is Allison Mims. I've been with Leighton almost 6 months now, under, of course, the guidance with Brian S., who will introduce himself.
Yes. Hello, everybody. I'm still waiting for people to tell me where they're from and how much they're enjoying their weather or not doing it. But happy holidays! Thanks everybody for joining us. I got my red and green on, and I like I said, it's that time of the year where the weather might not be great. And Mims, you got pink on. It's Wednesday. On Wednesdays we wear pink. If anybody knows that phrase, big movie quote guy here. So. Awesome. Now we got people telling us Montreal, Virginia, Florida. All right, Tani, I see you. Beautiful weather there. She's going to rub it in. Anyways, I've been at Leighton for about 1.5 years now. Prior to that, spent about a dozen years at Big Four and top 10 CPA firms and built a solid practice that sold into a top 10 firm. So I've been living and breathing the state and local tax stuff for a while. Happy to be on the call with you guys and happy to be diving into the subject. Tax tactics, as we call it, where we try to make tax law as exciting as possible here, and so we fall on some alliteration. I think you'll see a little bit more of that coming up, but that's our background, and we got a QR code there if you want to chat more about taxes or about weather. So.
So Leighton is an international firm, and we help business access all types of complex tax credits and strategies. Our mission is really to just provide businesses with solutions that help with their growth, achieve sustainability and performance. Leighton has been around for over 25 years. We're steadily growing. We're always adding more countries as we progress. And our state and local tax practice is focused primarily in the U.S., where we are seeing a lot of expansion and we're excited about it.
Yep. We got Boston, San Francisco. Like we said, we got people like the rest of the business world nowadays. We got people all over the country. So I think we've got all the four corners and everything in between painted.
So we're going to start with what state and local tax is. The W's of the refund reviews. We're going to go over some exemptions, and we have a few case studies at the end where we kind of run through, some of the things that we've seen in our day-to-day and how we handle it from beginning to end. And of course, we'll end with some final notes where you guys can ask some questions, and we'll be happy to help, live and kind of get you going.
Yeah, awesome. All right, so let's get into it. State and local tax. So, read this as you will, but the point here we're trying to make, we're going to try and get through a couple of the first slides quickly so we can dive into the nuts and bolts of the refund stuff that I know you guys are eager to learn about. But state and local tax, it's important to have kind of a well-rounded plans all the way from, we put the blueprint there. So making sure that you're aware of everything that you're doing, following all the laws, due diligence. I make sure to bring this up once or twice because it does come up a lot. If you are ever in the position to sell or acquire or merge or anything like that, state and local tax is one of the biggest issues that comes up. So helps you make sure you know what you're doing there. state-driven audits. Unfortunately, these are a part of our world, and if you've been lucky enough to dodge them so far, that's fantastic. But we would much rather get a notice from a state about an audit and feel comfortable that we're good to go, as opposed to being, oh man, I should have taken care of some of these issues prior. And then just peace of mind, right? So if you've done all these things, it's always good to make sure to follow that up, make sure that nothing has changed. These laws change all the time, and you work with new vendors and customers all the time, so making sure that you're staying on top of it is good. A lot of words here, so I'm not going to read from it, but again, kind of goes to show that there's a lot involved with state and local taxes. Nexus study, so reviewing your sales activity, voluntary disclosures and registrations, making sure that you are getting set up in the states that you're doing business. The third column there, we're going to talk a lot about today. And then the fourth column, just any other thing, kind of a catch-all: property tax compliance, credits and incentives. I always joke, if your business is doing anything at all in a state, we should talk, because there are hiring credits and incentives. There are building new facilities credits and incentives. So it's not just sales tax, which we're focusing on today. There's also income tax credits and incentives as well. I'm sure you guys are familiar with the R&D tax credit and other things like that. So keep this in mind. And like I said, we're happy to chat more about any of these products at another time. Okay, there's the setup to the refund reviews. Now, they're otherwise known as a reverse sales and use tax audit. We like the word refund better than audit, so we've kind of done some internal branding, rebranding rather there. And I keep joking with my team that we need to go out there and copyright it before we start seeing it on competitors' websites or anything like that. So feel free to use that terminology. Like I said, it paints a better picture of getting a refund than going through an audit. And so here are the 5 W's. I've got 2 listed here. I was gonna quiz all you, make sure we remember what, like 3rd grade writing and English, the 5 W's to cover all of a subject, but I jumped the gun. So what is a refund review? It's put simply, it's a situation where your business as a buyer is paying more sales or use tax than you needed to. And it's really great because it's a cash back opportunity. So it is not a credit that you put on a tax return or an incentive. Although those are obviously really great as well. Cash in hand is always king, right? So that's what we're looking to, or that's what we're trying to do here is get cash back. Why do these situations occur? CPAs, accounting firms, accounts payables team, they are doing lots of things. And I love my CPA brothers and sisters. Like I said, my background has been a lot of CPA firms, but especially during busy season, we get busy with other things. And what we see is, hey, we've got to get these tax returns done. Our clients are giving us this information. Our job is to put it on these returns accurately and get them out the door. And so it's an important job, but they are not looking at, most of the time, all of those invoices that come in from your vendors, right? And so really trying to make sure that they're accurate, capturing every exemption that applies to you, sometimes just get overlooked. You're building, I put the second bullet point there, you're running your business, right? So you need the materials or supplies, whatever you need to run that business. And so you don't have the time to oversee everything that you're buying. The other thing to keep in mind is that your vendors that you're buying from, unless you give them a reason to exempt your purchase, they should be collecting sales tax on what they're selling you, right? And so your vendor may not know that what you're buying is for resale or what you're buying is used in some sort of exempt manner. And we'll dive into what these exempt manners are. You get a little taste there, but they're not going to know, right, that they shouldn't be charging you sales tax unless you give them the correct documentation. So they're going to be charging you. You need them you need your products and services in the door. And so you go about your business. And so it just gets charged and it gets overlooked. Some of the other things, I think we have a use case study later on about this, is that they might not know what to charge sales tax on. And, it's unfortunate, I think, for most businesses that there are 13,000 different taxing jurisdictions across the country. So that's states, cities, counties, transportation taxes, all these different things. And So it's unfortunate for businesses because there's a lot to hold on to. The silver lining for me and Allison at least is that that it keeps us employed, right? Death and taxes, we're always certain to have that. So, but anyways, um, your vendors might say, hey, you know what? I sell software as a service, and that's taxable in Arizona, and I'm based in Arizona, so therefore I must be having to charge tax on my SaaS sales to businesses in Florida, and Florida doesn't tax SaaS, and so you might get an invoice for SaaS and pay the bill and not realize, oh, the vendor was wrong there, right? So you can see how this comes up. Same thing with installation and shipping. States have different rules on this, and so your vendor might not know the rules in the states that you operate in. And then if no sales tax is charged, we have worked with businesses who think, you know what, they're not charging me sales tax, therefore I must remit use tax to the state. And that's true, but again, these exemptions apply where you might not need to remit that use tax. Okay, before I jump on to the next slide, quickly write in, what are the other W's? Does everybody remember? Because I was going to quiz you. Anybody? Drum roll. Look, we're talking about tax laws here, so I try and keep it interesting for you guys. My longer presentation had a lot of, there we go, 1, 2, 3, 4, 5. That way to go, Tanya, or Tani. Sorry if I mispronounced it. My longer version of the presentation that we usually give to CPAs and attorneys for continuing education has a lot of holiday themed related jokes. So this is the abridged version that you guys are getting, but we kept the juicy stuff in here for you. So thanks for playing along with us. There we are. All right, so the other W's here. When it's typically a 3 to 4 year look back period. Again, every state applies laws differently. It's a running 36 to 48 months. So a lot of times we say, hey, it's a 3 to 4 year look back. It's easier to say. But it doesn't fall off the map, right? So we have December coming up, finishing. It's a new calendar year. That does not mean that all of a sudden the entire calendar year is lost. It's month by month. So that's a really great thing, again, about these refund reviews. And we can do it every single day of the year, right? So it doesn't need to be turned in by April 15th or March 15th or whatever your filing deadline may be. We can do it at any given point. So it's really nice. And then where do we do it? Is to each state where the goods or services are delivered, typically known as the ship to state. So that's probably pretty given. It's right. It's where you're based. And then the extra question, how? And so in a nutshell here, we review your purchasing activity to identify this overpaid tax. And so what that can look like is just going in, working with your accounts payable team if you have that. Some of our clients have, a folder that says, here's all the invoices that we paid in May. Here's all the ones we have in July. And they will drag and drop to a secure Dropbox. And we have teams that will sift through that. We know what we're looking for, so we can easily identify stuff. And so we review purchasing activity that way. Some of our clients say, hey, look, we do all this through QuickBooks. Can I give you my login information? Of course, we can do that as well. And then after we review your purchasing activity, we say, okay, we think we're able to get ABC Corporation, $500,000 back or whatever it may be. And so we'll request this refund from a vendor first. And the reason we go to vendors first is because it usually is easier and happens quicker. And by that, I mean, we say to the vendor, hey, here's all the documentation, those exemption certificates. Here's everything you need to know about what we're doing and why we're asking for it. And the vendor can say, okay, thanks for giving this. Here's the money back. One of the questions we get is, well, why would a vendor want to do that? And we have to remember that the vendor is not collecting the sales tax and keeping it in their bank account, right? So they are just a conduit from the state, or for the state rather, to collect that sales tax and give it to the state. And so they'll refund your money from the purchases that were exempt, and then amend their tax returns with the state website. And so it's a fairly simple process. No dirt off the shoulder of the vendors. So that's why we like to do that. And then of course, if for whatever reason the vendor relationship is broken or the vendor is no longer existent, sometimes we have vendors that say, hey, our policy is to refund up to a year. After that, please go to the state. We of course can do that, submit the files to the state. some of you may have realized, if you work with the state at all, that the wheels of the the wheels of the state turn a little more slowly, and so sometimes we submit those refunds, and it might take a month or two to get the money back, but nonetheless, we can do that. And each state has a unique process. Of course, that's a theme in the SALT world, right? It depends on the state is the typical answer. And then at the bottom here, this is the but. So these are common objections or questions that we get, and so they'll say, you know, if we do this, what are the chances we get this done, or anything like that? And I say, hey, look, this is very black and white, meaning the law says if you're a manufacturer and you're buying machines to manufacture stuff, you don't have to pay sales tax. And if you did pay sales tax, you can get it back, right? Like, that is very summarized, obviously, but that's what the law says. And so it's not a gray area where we submit returns and we ask the state for the money back, and then all of a sudden they want to audit your processes or anything like that. That is not what happens. And so don't worry about audit risks. The second but there is, well, I think we're all buttoned up. I think we've done this before, or we've been in the manufacturing or agricultural field for decades, and so I think we're good. We work on contingency, and so you shouldn't be getting an invoice, whether it's with Layton, which I hope you work with us, or any other business. You shouldn't get an invoice unless you're getting some money back. And so it's always nice to, I always say, and I put on there, best case scenario is that you are completely buttoned up. Then you have that peace of mind again. You know that you're doing the right thing. And so if we review your purchasing activity and say, hey, looks like you're buttoned up, then fantastic. But coming again from even the big firms and stuff like that, they're all humans, right? And they miss stuff, and so stuff does slip through the cracks. So no issues if you are buttoned up. It's always nice to have a second set of eyes on it. And then how long is this going to take? My time is money, of course. Everybody's busy, especially this time of the year. We've all got plans and places to be. So if it's not easy for you to drag and drop invoices or anything like that, a lot of times we say, well, why don't we start with the last quarter? Or why don't we start, if you bought some big machinery at startup phase of your business, or you had to replace some stuff, in July of 2022, let's start there. Or we can look at certain types of purchases. And so that gives us an idea if there's an opportunity there, and we can extrapolate out on other months. Okay. I was going to ask what W we didn't cover, but Tani already took care of it. So, Mims, I'll throw it back over to you, I think.
Yes.
Here we go.
All right.
The last W was who?
Yeah. Who is really, a big primary focus is going to be on our resellers. And of course, our resellers are just someone who takes a product and then they sell it to their customer, which would then ultimately be the end users. I did have an uptick in some of our clients where a big question was, if I'm selling to, a big box retailer, let's just say Walmart, and you have no idea who Walmart's customers are, but the law is talking about end users. Am I responsible for knowing who those end users are? And their answer is no, right? Your responsibility kind of ends when your transaction ends. And I pretty much show people, just look at your invoice, right? Who's on your invoice? That is your end user. So it's really important for our resellers to pay close attention to that. And also another big who is manufacturing. Manufacturing is big business. There's a lot of ins and outs in manufacturing. There's a lot of raw materials that are used within that manufacturing process. We have pretty much in every state, we're going to have manufacturing exemptions. And there is a common theme in the types of manufacturing exemptions you find in states, right? Depending upon the industries within those regions. So we can pretty much know who our clients are depending on the states. But, we're going to be looking at your machinery and equipment. We're going to look at those utility bills. That's a big opportunity that our clients miss. It's like, yeah, if you have this manufacturing facility and you have those utility invoices coming in and they have sales tax on there, that is an opportunity in some states where they allow you to get their refund back. So that's a huge opportunity we find quite often. Software is, of course, huge and emerging place, and packaging materials is a huge thing that we see an uptick in manufacturing that we want to make sure that we cover. We go in. A big part of my day-to-day is doing a deep dive into those invoices, finding where that sales sales tax was applied and making sure that it is applicable to that state's manufacturing exemptions, statutes, and regulations. And we just do all the work for you. So we try to make it as easy and as simple as possible. And then the next slide, we're gonna unless Brian, you want to add.
No, that was great. So just kind of a quick anecdote. So this happens a lot, but we're finishing up a project right now where the manufacturer was saying, "Hey, like I said earlier, we've been doing this, we've been manufacturing this product for a while. We know what we're doing." And a lot of times they'll say, "Fantastic. You know what? Let's just check your utility bill." So just take a quick look at your most recent couple utilities, and they had not been claiming this, and so we're about to deliver, I think, about $400,000 worth of cash back to them. So keep that in mind. It's an easy one to check, and can those utility bills can really get big. And then the other thing on the slide is just the software, right? Quality control. So if you're using in-source software to do quality control, again, depending on the state, you can get that exempted as well. Let's see.
Perfect.
There we go.
And then our next slide is really going to focus on the exemption categories, where there's big business here, right? Agriculture, research and development, restaurants and hotels, they each have unique kind of raw materials and things that we're looking at. With our agriculture, you're going to find it in most states, right? And we're going to be looking at those livestock, the feeds, the seeds, animals, tractors, really anything that you're purchasing that is going to have sales tax applied that involves any of these major categories listed below each subgroup is where we're going to find the most opportunity in getting those sales tax refunds included in what we're looking for, right? And the research and development, again, it's going to be in most states. We're really looking heavy. There's going to be large machinery and equipment purchases there, right? Clean rooms, everything that's utilized in those clean rooms, the testing, the utilities, again, right? Huge space in the research and development. And for the restaurants and our hotels, we don't see those quite often, right? Those are pretty unique. But when we do, we do find opportunity, and we do big in looking at purchasing those ovens, purchasing those freezers, those grills. Again, electricity, the things that you would use in a day-to-day in those restaurants, right? Also, and your plates, your cups, your silverware, your tables, and your furniture. And reselling those things, we want to make sure that the restaurants are covered in that area. Hotels was one that was surprising for me, that we were able to find opportunity with. And it's just really those day-to-day kind of things you see in those shampoos and those conditioners and those body wash, the little tubes that you find in your bathrooms as you're visiting the hotels. I always,
the
of course, put those in my bags.
Yeah, I was going to say,
yeah,
they're definitely a whole drawer of them, yeah. Yeah. So just trying to keep it moving here so we have a couple minutes for questions, but a couple quick case studies. So we've talked about manufacturing here. A lot of times it's just, they don't have a process in place to, again, review all of this stuff. You'll see on there the MEMSU, MEMSU. I need to copyright this stuff, but I think there's a better acronym out there. But machinery, equipment, materials, supplies, utilities, all these things that can be exempt for manufacturers, agricultural businesses that we just talked about. Couple quick notes on this slide. One is the date signed and the benefit study delivered. I like to put that on there just to point out, like, hey, we can review things fairly quickly here, right? That was 9 days, and get you an answer of if there's going to be a refund available and how much it's going to be. So that's great. And then I put on there the amount of refund and just the math so that you guys can see. So $5 million a year on this MEMSU, and a 4-year look back, and the tax rate of the state gets you how much money they'll be getting back, just so you guys can have a picture of, well, how do we know how much refund is how much cash is going to be refunded. I think we have one more quick case study. This one was interesting just because it started as a nexus study, right? So one of those slides earlier when we talked about the other things that we do. And so usually through a nexus study, we say, hey, let's look at some of your invoices just to verify that everything's going smoothly. And this particular client had been working with their vendor for a dozen years, right? And so in year one, they set up, hey, this is the tax rate for where we're delivering the product. And then the tax rate changed. And it was, it changed in the state, but the vendor had never changed it. And so they were overpaying for years and years and years. And so we were able to get a lot of that money back. And so it's not always the same cut and dry case, but we're always looking to make sure that clients are taking advantage of these exemptions and reviewing tax rates and all the other things that that they can look into. Final slide here, and then we'll get some quick questions. So just a couple notes to keep in mind. I always like to point out, right? Notices and audits. We have clients a lot of times that will come to us and say, "Hey, I just paid, $100,000. I got this notice in the mail. It says I owed $100,000. I didn't want to, deal with the state, and so just to get them off the back, I paid the bill. We moved on." Um, Give us a call before you make those bill payments. A lot of times these states are making estimates on how much they think you owe. A lot of times it's just because a return hasn't been filed. So if you get a notice or audit, give us a call. We'd like to help you out with those. Talked about due diligence. And then the final note there is just because we're getting into that time of the year, the calm before the storm. And so if you personally, or if you're CPA, or as you're preparing those apportionment numbers of, hey, where do we sell stuff? Where do we have property? Where do we have payroll? Let's take a deep dive into the income tax side of that, not just the sales tax side. See if we're sourcing it to the correct state, taking advantage of some of these throwback and throwout rules. And if you're not aware of that, perfect. Give us a call. We'll explain it to you and make sure you're not paying more taxes than you need to. Okay. We're at 1:27, so a couple minutes for questions if we have any. Put this QR code back up. Oh, sorry, I wasn't even looking at the chat. What steps do you take to ensure that clients receive their tax returns as quickly as possible? Yeah, so well, full disclosure, as I mentioned, we work on a contingent basis. So our futures are intertwined, and so of course we want to get you that money back as soon as possible, so that we can get paid as well. And so but we have full teams that, like I said, have been doing this for a while. We go through those invoices quickly, or we're able to identify, hey, here's the type of spend that we're looking for on invoices. We're not worried about $1 of taxes on a certain invoice. We're looking for bigger ticket items, seeing if there's a trend, right? If we look at a couple months at a time. So really just looking for the right things to speed along that process. And then we manage all the correspondence with vendors in the states, and we stay on them, of course, to make sure that that they're doing what they need to be doing to get this money back for you. And Heather, can you share a recent win? Yeah. So I just mentioned one about the manufacturing one, a couple of case studies. Let's see, we had one where this was a client in Texas who had actually gone through this process, or rather they got audited by the state. And so they had a small sales tax bill to be paid. Fast forward now three or so years, and we didn't work with them through this audit process. And they said, well, I think we're buttoned up because we went through this audit. And so now we're paying tax, which we weren't before, on all this stuff. And so we said, hey, before you remit this use tax, let's see if you're actually paying, if you need to be paying tax on it. And so for them, I always explained it in this sense of, if you are buying steel and then shaping that steel into a product, the steel that you're buying is materials that you are reselling, and so that should be exempt. The machinery and equipment that you're using to shape the steel, that machinery is used in the manufacturing process, that should be exempt. And then the utilities, right? So if you need electricity and gas to power those machines, that should be exempt from sales tax as well. So there's really a lot that we can find. Any other questions? I know it's 1:30 now, so again, I appreciate it. And I'll be giving you a call. Everybody else, thanks for joining. Please shoot me a message. You got the QR code there, and enjoy your holiday season, everybody. Thanks.